Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday morning pre-market webcast. Okay, we're starting off on the daily chart, and in case anybody was not familiar with the concept, what you have right here is what we call a red candle. Red candles occur occasionally, but not consistently in U.S. markets. So what did we see yesterday? You had a 25.77 quarter high. It tested 77 off the open. It held it all day. Your opening print in the regular session was 25.76.75. Your opening print was your high print. And the bears just steadily pushed it down all day. It was a very gradual, very orderly move down, which is the kind of move down that you want to see if you're starting to see more of a two-sided market. My complaint all along has been that the bears have not done their part to expand the daily range. Bulls push it higher, they don't have a lot of conviction, and the bears can't expand the daily range, and that's why we were getting days that look like this. These very narrow candles. You can already see the ranges here, here, and here are expanding. So that's good news for volatility and the tape starting to do things that, we felt it was going to do. That kind of limited volatility isn't going to last. We have not seen what I would call high volatility, but we are seeing now a very tradable tape. Now, hopping over onto before I go to the hourly chart, converting the blue line, converting the 9-day is the first key if there's going to be any kind of a deeper move down. And remember what I've been saying. Just because there's an increase in volatility does not mean we're going to get a pullback. An increase in volatility could be an inability to get through the 9-day and continued moves higher towards 2,600. That's just, increased volatility does not mean we're going to go down. It could mean that we're going to go up. If you're a trader, it doesn't matter. Don't pick sides. Don't have a bias. Trade what you see. And, there are three things right there that we're going to talk about after the close today in the Trader Psychology webinar. I'll tell you the same thing I said yesterday. If you trade stocks, if you trade options, bonds, futures, whatever, a trader brain is a trader brain is a trader brain. And if you trade this stuff, I strongly suggest you come in and soak up some really valuable content at 4:15 this afternoon. We're going to talk about trader psychology, and I'm going to open it up to questions about halfway through. And whatever you're concerned about as a trader, let's get it out there. I'm sure if there's one person with a question, there's going to be 20 people that want to hear the answer to it. And I'm looking forward to a really, really, really fun, valuable webinar this afternoon at 4:15. The sign up is on the YouTube, at Twitter, Instagram, it's everywhere. We're not getting a deeper move until they convert the blue line, bottom line. And that gets us down to the green line, which is your daily mid-band, and that's basically high noon for the market. Hourly chart. So like I said, 25.77 resistance here, all through the pre. Down to test the weekly pivot on a Monday afternoon. This is when the market has liked to make weekly lows. We'll see if that's the case again this week. I am long 62. The room put out a setup for a long setup against 62 right at the close to see if weekly pivot wanted to be good again, to see if we wanted to carve out another low on a Monday afternoon. So far, when we were short down into it from 69.75, we long gold at the same time. So it was a really nice, solid Monday in the room. You can see it tested the weekly pivot here. They tried to wash out a bunch of people down to 62.5 around the time of the Europe Open. But what you're seeing now is you're seeing higher lows on the hourly and an attempt to convert the hourly mid-band, which gets you up to the area of 25.70 to 25.71. If the bears lose control again, then we go right back to 77 from here. Don't think for a moment, just because they had one heavy Monday, that they can't have green Tuesday, Wednesday, Thursday, Friday, because they absolutely can. If the bears want to have a day, they're going to need to do the same thing that they did yesterday. Defend the open and have a fairly heavy day. It doesn't have to be a violent day down. It just needs to be a day where, the sellers are prominent. But the result of that day, in my opinion, has to be a close below the weekly pivot and a move down towards the area of the 9-day simple moving average, around 59. They're going to have to start to convert areas that really, really matter. It's one thing to back off the double top at the all-time high, okay? That's profit taking. When you start to take out weekly pivot, 9-day, and push down to deal with higher lows and lows that were made last week, then you're starting to see the bears want to be involved in the tape and to make some real progress over the course of a day, okay? We're not there yet. All right. Everybody have a fantastic day. Again, I'll see everybody 4:15 this afternoon. Trader Psychology webinar. We don't do these very often. We're doing one today. Come check it out. I'll be around for a midday update. Talk to you then. Trade 'em well. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade 'em well.